Good morning, good afternoon, good evening, traders from across the globe. Welcome to the Short-Term Trading Live with Oscar. All right, traders, this video is for Friday, 12/19/08. We're finally here in December, finally at about the end of the trading year. And traders, the last video I left you off with was a video that said the market's going to go up for a day, but don't fall in love with the upside, right? And I showed you this apex that we were in, and I said lots of times in an apex you get a false breakout to the upside in a bear market, and then a turnaround and a breakdown, and what happens is you end up going down through the bottom of the apex, and the top breakout is a false breakout. That's what I told you would likely happen. So we bought the S&P, and we had like a 25-point winning day, baby. That was yesterday, making that Wednesday. On Thursday, Emini came out and said, now we go right back down. I told my Omniacs, let's get short. Omni's level was to sell between 908 and 911 in the S&P for Thursday's trading. The high happened to be 911.5. Emini wanted to get out down at 871. The market broke to 874.5, and we got out. So we picked up 30 to 35 points today, and that was based on knowing that the trade was going to go up through the apex, have a false breakout, and come back down. So that was Wednesday and Thursday. Now for Friday, I want to show you something, and that something is this. Trading in an apex or wedge formation, and I want to show you about false breakouts. When you have a wedge formation, and I'll show it to you in a moment, always expect some sort of a false breakout in the opposite direction of the natural trend. Then you come back down into the natural trend and break through the bottom of an apex if in a bear market. In a bull market, traders, it's slightly different. In a bull market, if you get an apex, usually you break down through the bottom, which is false, and then blow out through the top. What I'm talking about is this. Bear market, right? We have a market moving down, so it's a bearish market. Then somehow it forms this apex, and what I mean by that is take the line and connect the highs and connect the lows, and what you end up with is a spot right here called an apex where those two lines meet. As you get closer to reaching the apex, basically you get a false breakout, traders. A false breakout means you pop up a little bit, you get a day above the line. The next day, usually you open up, stay above the line, but get back into it slightly. And day 3, you break back down into the apex. And finally, at some point, you break down completely, and it goes in its natural trend. We're in a bearish market, so to break out of the upside of an apex doesn't make as much sense as breaking out to the downside. So this is the exact area that we traded in the last 2 days. And traders, we had monster winners. You go Omni. Viva la Omni, baby. All right, so now I'd like to show you a couple of charts, traders, and I'd like to show you exactly what we were looking at, what generally will happen with an apex. Traders, this is technical analysis. There is nothing 100% in technical analysis, meaning every apex you see is not always going to give you exactly that. But if you trade every apex the same way, your results will be much smoother overall. Now, I'd like to show you some charts. Let me show you exactly what I'm talking about here, traders. Let's go to the charts. Okay, traders, once again, a false breakout. Let's read a little bit first. A small pop out of an apex is usually a sign of a reversal to come, with a drop back down into, if not through the bottom of the formation is expected. Stay tuned. This was put out on my website on Wednesday evening for Thursday's trading. And what we had was we had this day and the second day. This third day here didn't exist yet. So on this day right here, I said to my traders, that's it. That is a false breakout, traders. What you're supposed to do with a false breakout of an apex is go short, keep your stop above here, and see if it actually is a false breakout, right? So we go short the S&P at about 908 to 911, right? Maybe 906, 907, 8, 9, 10, 11, right in that 90 area. And we started to sell up there. The market turns around and does this for us. It dumps all the way down to here where we get out in the 874s. Now, traders, how did I know this was coming? First off, you have the big apex, right? We're in a bearish market. Undoubtedly, here's the market. Bearish as can be, right? Well, if you're in a bearish market and you form a descending wedge or apex, what happens is you rally up to the wrong side of the market, being the upside if you're in a bear market. You put in a false breakout and you turn right around and head right back down. Now, traders, I did this illustration for you in my video just 2 days ago when I said we're getting long for this day. And we did get long for this day and had a nice fat winner. Then I said, forget it, let's go get short. And traders, what a great piece of analysis that was. Now, that came right from the analysis, right off the apex. Easy to spot, easy for you to see, and easy for you to recreate on your own. When you have an apex or a descending wedge and the market is bearish and it breaks out over it, expect the market to come back into it and settle lower. That's what we did, and that gave us a great trade, traders. So don't forget, the apex gets a false breakout, comes back down into it, and usually breaks down here if in a bear market. Now, I'd like to show you the reason why I was brave enough to expect this to be a false breakout and not think that it was going to take off and run and turn into a bull market, which is ridiculous at this point in time. But let me show you the technical reason why I was brave enough to call a short and why Omni spun from green arrow to down red arrow within 1 day. Let's look at another chart here, traders. Okay, traders, here's another lesson. We talked about an apex or a descending wedge and what that means, right? In a bearish market, a descending wedge normally means more downside. Now, 2 things here. How can you decipher if a market is bearish? Well, quite simple. Follow these red lines. You have a high, you put in a low. You put in a lower high, then you break down and put in a lower low, right? Lower than this. Then you rally and put in a lower high. Then you break back down and put in a lower low. Then you rally up and put in a lower high. And once you've put in your series of lower highs and lower lows, then you realize that you are in a bearish market, right? So there's a small lesson right there on this chart. A low, a lower high than the one before, a lower low than the one before, a lower high than the one preceding it, and so on and so forth. Now, I have said that the Dow Jones Transportation Average is the leader of the indices, and how goes the Transportation Average? How goes the S&P, right? This chart is a daily Transportation Average bar chart, the daily Dow Jones Transportation Average, and if this is the leader, check this out. 2 days ago, on Wednesday for Thursday's trading, this apex is here, right? Just like the apex that you've seen in the S&P. The leader failed to get above the top. It stopped cold right at the top line of the apex, did not break out of it. Now let's look at S&P. S&P was in an apex, and S&P popped out of the apex and went back down into it today. Now, how did I know to sell the S&P up here? Well, if the leader did not break out of its apex, the leader means the leader's telling you that the market failed and wants to go lower. If the market failed for the leader, you better believe it's going to fail for the S&P, the follower. Now, there are many speculators that are still specking in the S&P. Not so many speculators specking in the Dow Jones Transportation Average, right? We're all ES traders. Everyone trades the mini. You don't hear about people trading the Dow Jones Transportation Average, which means there were no specs to pop it out of here, giving us a definite sell signal. If the market, the general market, or the leader, being Dow Jones Transportation Average, does not break out of its apex, it's telling us neither will the S&P. On the same day, the S&P is already out of the apex, so the one down here, the Transportation Average, tells me S&P is going to break. With that information and indicators, which I'll show you next, all pointing towards the downside, I allowed the leader to lead the S&P lower. We sold the S&P and had a fantastic trade, traders. This is how you use an apex. If you were watching an S&P apex with the speculators in it, you would have had the false breakout telling you to go short. Because I used the leader to confirm the follower, the leader says, forget about this. This is false. It doesn't exist. It's going to go lower. I follow the leader. Hence, my Omniacs have a great, great trading session. Traders, I would like for you to do homework on this. Pull up those wedges, find them, and see if you don't get false breakouts on the upside before the downside comes. In bear markets and in bull markets, if you had an apex, you basically should get a breakout to the downside first, which turns around and gives you a rally into the natural trend. That is how you trade an apex, traders. I made this happen live before your eyes at my site, live on camera, and I did a YouTube video about it. So I am sure now you should be able to reproduce this type of analysis for yourselves. Let's go look at one more chart, traders. Okay, traders, now we are looking at the indicators for the March S&P, the Emini ESH9 daily bar chart. On the very same day that we called for the turnaround and short side because the apex failed, the commodity channel index clearly went into a sell pattern. As you can see, the blue line hooked over, started facing down, and the red line crossed over it. Bearish. The stochastic oscillator has easily got up to its overextended area where it's gone too high, put in what I like to call a double-legged top, and is pointing towards the downside, another bearish indicator. Then you have the directional movement indicator. There's a green and red line in my indicator. When the green line's facing down and the red line is either facing up or down with the green line, that is a bearish indication. Clearly right here you can see that that was another bearish indicator. So indicators were bearish. The false breakout took place as we expected. The leader never even got past the top of the apex trend line. That was a good piece of analysis and a good sell signal, traders. I hope this analysis is helping you. I hope you can recreate this for yourselves. So, you see those charts, traders? Hey, let me tell you something. Follow the leader works really well, like we showed you in a couple of videos ago. That is Dow Jones Transportation Average being the leader of the other indices. And trading in apex or wedge formation gets false breakouts before the market actually moves into its natural trend. Traders, one last time, remember, the apex looks like that. If the market's coming down from here, you get a false breakout and then a real move in the proper direction of the trend. That is how an apex will work for you 90% of the times that you find one. Yes, every now and then you're going to get an apex and you're going to break out and keep going, but that's a market turning from bear to bull, and there's no way this one's turning from bear to bull yet. We are bearish. We have been in a bear market for a while. We claim this is going to stay in a bear market with every now and then you'll get some pops. Those are usually called dead cat bounces in a bear market or bear market rallies. That you can expect. Downside is what you should be looking for on a larger term picture. The traders, we are day traders. So 2 days ago's video told you to get long. That worked. Yesterday's recommendation at the site told us to get short. That worked. And today's lesson tells you where this market is very likely going next. Make sure you keep an eye on the apex and see that the Dow Jones Transportation Average does not get above it. And if it doesn't, we will continue down and break through the bottom of that apex. Now, traders, if you would like to learn how to do analysis like the analysis I just showed you on the board, come on down to www.livewithoscar.com. Grab a free membership. I am there, live on camera and live microphone, holding classes and teaching you traders how to be better at analysis, what the mental game is behind being a full-time trader, and how to apply the analysis going forward so that you can see what's happening next. Make sure you come on down to the site, traders. Make sure you always do your homework. Now, let's talk about this. Traders, this is the end of the year for me. I am done. And I get to leave off with a 60-plus point winning week. Maybe more than that. I didn't count every day, including the loss that we took on Tuesday. Monday, Tuesday, whatever day it was. So, we had a great week. It is a great way for me to end the year, and I am going to relax for the next couple of weeks. Traders, I am telling you something right now. What is happening in the markets, in the currencies, in the dollar index, and in some of the other markets out there like grains and metals, you are getting holiday movement. You are getting markets moving in directions they do not belong in. I will do a video before the new year starts, and in that video, I am going to talk to you about holiday market reversals. You have seen other videos. Every major holiday, I do a holiday reversal video. We have not been wrong yet, traders. What I'm telling you is the month of December, you see a lot of movement that just does not make sense. You have markets moving away from their natural trends, and they will turn around and go right back into their natural trend when we get back in the new year. Maybe not on Jan 1st and 2nd, but after the first week, these markets will get right back into their natural trends, and I will be there with videos and at my site to guide you through it. Another thing, traders, we got some Xmas footage, baby. We got some Christmas footage for you, some holiday footage. It snowed in Vegas. We built a snowman. We got it all. We got the footage for you. We're going to try to put together a little video to show you snow in Vegas, because I'll tell you what, my children had a snow day off from school. The school said the last time we issued one of them was 1974. Holy cow, some snow in Vegas, man. We went right out there. We had snowball fights. We built a snowman. He's actually a snow dog. Wait till you see him. He's a snowman with a dog's head. So we had some fun. All right, traders, give me a call anytime day or night, 702-629-4755. I will be working the next 2 weeks, but on and off, sporadically, enjoying time with the children. I'll try not to get in front of my camera too often during the day at my site. I just need to relax. I mean, woo! It's been some great year, boy. The Omni has had one of the best years I've ever seen Omni have, and it ended off with a great winning week. So traders, happy holidays. Have a safe, healthy holiday. Do your analysis. Practice as much as you can. Stop trading for the rest of the year. Let the end of December happen without you, and we'll all come back in January. Thank you so much, traders, for all your participation. Omniacs, thank you so much for everything that you do. And I will see you next for the Christmas video. Okay, traders, remember, say this to yourselves every morning, every afternoon, every evening. It'll help you keep your emotions out of trading. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.